Back again for round two. Thanks for being here, James. Or round two of revenue searchers for today. This is obviously your first. Can you hear
Yeah,
me? Okay.
yeah, I can hear you well. Thanks for having me on. Excited to chat.
Right. Yeah, I've been again. I look forward to every revenue search, but obviously we know you guys all pretty well. So like we already have a good understanding of Synth, but I think we should start from the top. Really, like who are you and what the hell does Synth do?
Absolutely. So, yeah, I'm the founder of Mode, which is an L2, and also co-founder of Synth, which is essentially a predictive modeling competition for financial time series data, which, yeah, helps build what we're calling the world's most powerful predictive intelligence layer for pricing. So essentially, it's price forecasting data, and not just point price forecasting data saying Bitcoin will be, say, $101,000 in 3 days. It's simulated synthetic data. So it's giving you the volatility. It's really a modeling competition for volatility around what the potential price movements of different assets can be. We currently have live on Synth Subnet BTC and ETH, and we're soon going to have live gold, which is very exciting. And yeah, that's kind of the overview. Um, I'm excited to get into all the things synth data can be used for, and share more about our journey.
Okay, so I think where a lot of people get confused when they look at synth is they go, okay, so they try and pigeonhole you in the price, just price prediction sort of bunch of subnets, but it's not that. Then you said it's all about okay, it's the way that the market gets to a certain price point. So the volatility forecasting,
Mhm.
effectively. So could you spend a little bit more time talking about the your volatility forecasting, because some people will think, well, wait a minute, aren't you just guessing okay a whole bunch of different like ranges, and surely anyone could do that? Like, what's the point?
Yeah, so we have this like fundamental belief that price is extremely hard to model, but you can model volatility, and you can mathematically, it's like a very hard math problem to solve to be able to model volatility well. And it's something that you can also continuously improve at doing. Um, so we ask like data scientists or miners on Synth to submit 100 price paths every 5 minutes on the price of Bitcoin or Ethereum or soon gold for the next 24 hours. And their goal is to get these price paths as accurate as they can to the actual price movement. So on Synth, there's like hundreds of millions of data points being pushed by data scientists, miners daily. And this is really, really useful for training financial models or training machine learning models on this type of data, because there's loads of it. And we see in finance that when there's too much of a reliance on historical data, there's often overfitting. And this causes models to not be as profitable, and not work as well as they should. So we say that like this idea of creating synthetic data, and creating all this data is really useful because it helps models train on like all the edge cases that happen in finance in the real world. So that's why, it can be very useful to have a huge amount of data. And that's why like this modeling competition is pretty unique in that it looks at volatility. But we see a lot more usefulness in this type of data than in like historical style point prediction data.
Okay, so you set a challenge. So the volatility forecasting of Bitcoin in 24
Mhm.
hours. There's 100 different price paths, and then obviously you have the path that wins, or what it's done over 24 hours, and then you reward the miners that are most accurate with their price path.
Mhm.
And does a miner get extra rewards if they are consistently winning?
Absolutely. So the miners are scored on how close their price paths are to the actual uh, price movement of the asset on a continuous basis. So the miners are always refining their models and always trying to improve their models. You sometimes see that some miners perform extremely well during like very volatile periods, like before like a big political event, like Trump's doing a speech. There's often a lot of volatility. Some models perform really well there. Other models perform better with low volatility. But all these models are constantly improving and competing, and that's kind of the magic of Bittensor. Is we've created this like system which is essentially like the Olympics for predictive or for Monte Carlo simulations. And we have all these data scientists creating these generative AI models to model volatility for these assets, and they're all constantly competing for the prize, which is the Subnet Alpha token. So,
So, so,
yeah.
so what's stopping someone just coming up with some random randomizer and trying to be a miner within Synth and just forecasting a whole bunch of rubbish things, and then every now and then they may strike lucky?
So it's quite difficult to come onto Synth and like, yeah, have random predictions, mainly because the modelers are quite good right now. Um, and you need to consistently be good to
Okay,
earn
cool.
rewards. So
And
the validators are scoring the miners on this like ongoing basis, right?
lovely.
So it's hard to come in and just give some like random simulations and do well consistently, like hour by hour, day after day. So yeah.
Nice. Okay, so this means there's no way someone could do something like a martingale sort of system. Like, so what? Like, I've been a massive hater of crypto copy trading. For the
Mhm,
last 7 years, there's so many. I called Bybit out once, and I made a video on how scammy the Bybit copy trading thing was, and I showed how it was just completely rigging the system, and then they completely changed it after that video. And so, for those who are not familiar with copy trading, is that basically, you know, all these platforms will show the top 10 traders and how they've made thousands of percent ROI. And
mhm,
what's happening is that all they're doing is they're taking massive bets. And, well, Martingale is like you're doubling up every time you lose. And so what happens is you see all these Martingale traders who are effectively doubling up or and losing trades. They don't cancel them.
mhm.
So it could be, they'll constantly take profit. So effectively, had to, like a 1 pip limit take profit, but they'll have like 1,000 pip limit stop loss.
Okay.
So their banked P and L is like doing this, but after 6 months, maybe 12 months, they all bomb because that one trade finally hits a minus 1,000 pips, and then game over. So what you're saying is that there's no way someone can martingale game this.
It would be extremely difficult. I think that like if
And
you
that's
were to try and game Synth or any subnet, the way to do it would be to buy lots of miner slots and put in lots of different strategies. Um, but it's very unlikely that those strategies on Synth will get through the immunity period. So
got it.
you most likely won't see those strategies run successfully for a very long time. Um, I think it's much more likely that you could run this strategy on like other price prediction subnets, and it's something we've like tested ourselves because some of them like they're more like a lottery. So it's more about like, yeah, how many miners you can enter and how many times you can put different predictions in that kind of, yeah, go across a spectrum of possible outcomes. You could actually use Synth for this. If anyone watching
Okay.
is mining other subnets, you can use like Synth data to mine other subnets. But yeah, it's pretty hard to do on Synth. Like we have a number of like miner reports. We release them weekly on the performance of all the miners. So you can like dig into data, miners can dig into data, and yeah, they're pretty in-depth reviews. We have like our
So,
Bayesian modeling expert running those.
so how is this useful for the average Joe then?
Yeah, so I mean, we've seen four main kind of like areas of demand which have emerged over the last like 4 or 5 months since launch. We see like a lot of interest in like kind of a B2B strategy, which is where we're focusing mainly on DeFi and like traditional finance organizations. So we have a number of dashboards, tools that we build around volatility modeling. So whether that's knowing where to put a stop loss, or knowing where you'll be liquidated in the future, or what the probability of a possible liquidation is. We've created like different dashboards for these things on synthdata.co. We've also been working with partners who can distribute synth data via API to different DeFi integrations. So lending protocols has been a pretty big one. They use synth data to help with risk modeling, risk analysis. And we've also seen a couple hedge funds or financial brokers recently get in touch regarding gold modeling and risk, kind of using that within their risk frameworks. So that's exciting. We've started to integrate Synth API into different trading tools. We have like one live integration on Mode's AI terminal, so people can query Synth data. They can ask about like their positions. They can actually do things like take a screenshot of their Binance position, put it into the LLM, and then see
I've
their probabilities and stuff. Exactly. And then we have like this like B to AI solution, which we're calling it, where trading agents have started using synth data, and we have been running a competition with a perp dex on Arbitrum called GMX. GMX is the biggest perp dex on Arbitrum. And Arbitrum is a multi-billion-dollar layer 2 ecosystem. So that's like co-sponsored between Arbitrum, GMX, and Synth. And there's 4 agents currently running strategies. They're all open for people to see. You can watch like the relative P&L. Some of the agents, you can actually see like exactly how they're using Synth data. So super exciting. We've also kind of gone down the route of we've been speaking to a few different teams that work on like block building, which is essentially adding extra information on like a block by block basis. So for people who do like MEV, which is maximal extractable value on blockchains, you can add predictive data on what the gas price will be for the next block. So we have like a lot of like other research stuff happening as well. Thinking about how we can integrate Synth more like an Oracle.
So where's the money going to come from for Synth? Just cutting straight to the point, like how are you going to monetize this?
Yeah, we have quite a few routes. So the first is selling API access, selling it based on the amount of requests that are done by the API. Building out like custom tooling for people, similar to our dashboards. We have potential route to market with agent teams who would pay to integrate the data. Again, most likely pay per API request or a certain limit to the API requests. And also working with larger organizations like hedge funds, financial institutions to integrate Synth into their workflows, help them with back testing, help them build out models. And that's something our team have like a fair amount of experience with. Potentially also within DeFi, we've seen a fair amount of interest in Synth. So we have a couple like risk managers who are working to integrate Synth data into protocols, and they would essentially like be a broker for the data.
How accurate is the data that you're producing at the moment, and does it vary depending on whether it's BTC or ETH?
That's a great question. So We have like accuracy reports that go out almost weekly or every 2 weeks. They can be found on the blog. And currently, like the benchmark we're using is the geometric Brownian motion model. Synth is currently outperforming that by roughly 30%. And this is a model that a lot of people would use when they are modeling volatility kind of in-house. So we're seeing the kind of interesting thing is we're seeing like consistent improvement by miners. So we were currently outperforming like roughly 2 months ago by 20%. It's now up to like 28%. So this is like very positive. And as the subnet continues to grow, we're continuing to see like the quality of data scientists miners who come to the subnet increase massively. So we're very confident that the models will continue to get better.
Is it the same accuracy across both of those predictions?
I actually need to check in on that. We have only had ETH Predictions live for roughly 6 weeks. So I'm not sure. I'll look at the last miner report, but currently we've been like benchmarking BTC, but ETH is still early days, so I'm not sure how good that is.
A silly question then, maybe. Like, is this a model that can be applied to anything, and it's the model that really matters, or do we introduce a new thing like is gold going to come in, and the model won't apply to gold, so we start off way out in the woods, and then we refine it and make it better. Maybe it's quicker to make it better because we've already done it for two different assets.
Yeah, so like ETH and BTC are fairly correlated as assets go. So if you're a miner running a model, you shouldn't need to adjust your model too much to model both of those assets. Gold is not as correlated, so you would definitely need to adjust your model. Also, there's like some nuances with gold, such as like market open and close hours. Gold trades like roughly like 24/6. It's closed on Sunday, so you need to take that into account. And like when you also get to stocks, like they're also some stocks are not very correlated to those current assets. So as we add more and more assets in, people need to refine their models for each different asset. But yes, like the skill of like modeling volatility can be applied across these assets and also across like many different industries, but you will need to like refine your model for each of those things.
So on top of that, Mark's question, do these miners or models account for regular market events? So non-farm payroll every month or FOMC minutes, because those events, they spook the market in terms of volatility every month.
They absolutely should. And you'll see some models that are more heavily skewed to like news cycles, social media data, things like this, and some which are reliant on other data sources. But like we don't see what goes into these models. We see the output of them.
Fair enough. Yeah, it's not your business.
Yeah.
It's down to the miners. Cool.
Yeah.
So on stocks and shares, then I understand that markets are open and markets are closed, and it's different to BTC. But have you got that built into your roadmap?
Yeah. So for gold, we have like a mechanism which will enable scoring when markets are closed. I mean, we started with BTC because, well, first it's an asset that we know very well, but it's an asset that trades 24/7. So this kind of competition where you need consistent scoring, continuous scoring, it suits BTC really well, and ETH and other crypto assets. But we are like adjusting various parameters to ensure that new assets can be added that have different trading hours.
Any idea roughly, like, is it a this year thing for stocks?
I think, well, gold's going to be like within the next 1 to 2 weeks. That's confirmed and we've announced that. Stocks will probably follow. We're really doing things based on demand right now. So depending on demand, it might be another like large crypto asset. It might be commodity. It might be an equity. We've seen like tokenized gold start to gain a lot of traction, and a lot of different markets or exchanges have started to list gold and see good volumes on gold. And gold is like the world's largest asset or commodity. So yeah, we're excited about that. And from there, we're kind of looking to add more assets based on demand.
And
could be Tesla stock, could be something completely different.
And you described kind of 4 areas of demand. Which of those do you expect to have the quickest uptake? Which of those is going to mean like most immediate revenue for you, and which might be the biggest revenue for you?
Most likely API access for B2B clients, so financial institutions or risk managers. Like API access is something which people are quite used to buying, right? It's like a simple SaaS model, and it's very easy for us to scale up. And we've had like a lot of good conversations. We've already started on some integrations where people are starting to like back test the data. We generally give people like 2 to 3 weeks to with API access to understand whether this data will fit in their current workflows. So
And the API access, is that the answer to that's going to be the first revenue stream to come online, or that's going to be our biggest revenue stream possibly, or is it the answer to both?
Sorry, just plugging in my laptop. I think it's the answer to both. Like, I'm pretty confident it'll be the largest revenue stream as well.
Yeah.
Well, surely, like if you took some really big hedge funds, volatility forecasting could make them tens of millions, or in the bond market with bond forecasting and debt offerings and whatnot. Surely, some entities could make tens or hundreds of millions by having a better volatility forecasting model. Surely that would give you more money than API access. Perfect.
I mean, they would access via the API as well. So they would buy API access like everyone else. I think that what we found like when having these discussions with these groups is how they integrate this type of data into their workflows really differs. And so we have to kind of work with them as much as possible to understand how to use this data. Also, some large funds, like most of them will have these type of volatility models already, especially if they're doing things like trading options. So we've had hedge funds that have decided to become miners to see how their models stack up against other miners, to see like, is the data good enough for us to use?
That's good.
But generally, like, we don't necessarily see like hedge funds as like the biggest target market, unless they are coming from traditional finance and they're starting to trade crypto assets, and they maybe haven't built these models internally yet. We've seen like quite a lot of interest from like these kind of firms that are in the transition.
That'll be such a good job interview exercise. So like, okay, we're recruiting a new quant, right? We're only going to take. You have to go off and mine on Synth. If you can get in the top 10 regularly on Synth, you got the job. I mean, that's what I would do. That's cool.
How will? Go on.
No, I was just going to say, if they come top on Synth, they might not want to take the job because they'll probably be making probably maybe $500,000 a year, maybe more.
How will these institutions pay for that API access? Is it fiat? Is it Tau? Is there another mechanism?
Yeah, it will be fiat. There's a very small chance that they'll be paying, like, if they pay in like any crypto asset, it would be stable coins. Like, there's a very small chance that they'll be paying with Tau, unfortunately. And I think that's more like just the way they're set up, right?
You take the dollars, you buy Tau, or are you going to buy alpha? Buy back your own alpha or not?
Yeah. So, I mean, our goal is really to cover like the costs of running Synth, and then look to start to look at buybacks. We also want to think about like a potential, like, what's our growth strategy. We see Synth now as like being very much in like it's like an early stage, kind of moving into this like mid stage organization where we have some of like what we believe are like the world's best modelers creating this data. We want to continue to improve the data. We want to add more assets. And as this has been, like, as the data's been getting better and better, we've been getting more and more confident in selling it in. And so we've started exploring different ways to sell in this data to different groups. We've started to see like a lot of interest, started to have some early success at that. And so now it's really about scaling this up. Looking to support like, the growth of the subnet for the long term. Like, our team have been pretty successful in lots of different areas of finance. And so the goal for us really is, how can we build this into like top 5 subnet? How can we make sure Synth is this data layer that kind of goes across all of finance? And how can we ensure that, the project is sustainable for the long term?
Holy shit.
So
top 5
5 months for us is
that's the goal.
You
got some tough.
I mean, otherwise we wouldn't we wouldn't be here, right? Like, everything we're doing, like the team in crypto, like, we're very focused on kind of really pushing things forward at the cutting edge. And we're super excited to integrate Synth into way more places. And we see a pretty straight like path for growth for us. It's just make the data incredibly good and useful. Integrate it with lots of different large organizations, and make sure it's like an essential layer for finance and decentralized finance and agents and all these things which are going to emerge in the future.
So for top 5 subnets, you're going to have to be doing a lot of alpha buybacks then. So I guess that's going to be a core part of, converting fiat into alpha.
I think that, for sure, that will happen at some point. But I also think that the current top 5 will not be the same in a few months.
I agree.
And I think we've already started to see like quality like rise to the top, and that will continue.
True. But ultimately, the alpha price equals the tau in the pool divided by alpha in the pool. So the only way that an alpha can be in the top 5 means there's constant buy pressure in that LP. So, but yeah, cool. That's amazing. I don't want to drag everything into the weeds, but nice. Do you have any last questions, Mark? Because this has been another great 15-minute session.
No, is it, I've asked this a few times, but if is there one person or one organization that could really open a door for you? Is there somebody that, if the phone rang, you wish you could have a conversation with them that would push things forward for you?
I think right now the most important thing for us and Bittensor in general is attracting much, much better miners and much better data scientists to the network, because there's firstly not much emphasis on this, that there is an unbelievable amount of reward available on Synth and on other subnets, and there should be much more emphasis on having literally the world's best data scientists competing week in, week out, and documenting the process. And if you secure the world's best data scientists, if we secure 10 of the world's best data scientists or quants, compete millions of dollars per year for that data.
Yeah.
That's what we need then.
That's the challenge.
Nice.
That's it. It's an interesting take. That.
And before we end, like, how long until your robotics subnet is up? Because I want to get you back in for that.
Yeah, we're still
Well,
looking
obviously,
at, like,
there's a cap. I mean,
yeah, different ways. We're not sure. We've been having some interesting conversations, but yeah, right now the focus has very much been on Synth, improving Synth, integrating Synth. Like, there's a load of cool integrations on Mode which have been developed. This competition with Arbitrum and loads of other stuff has been happening. So yeah, that's kind of the focus for now. But we're extremely excited about synthetic data for sim to real world humanoid robotics training as well.
amazing. Well, again, thank you very much. We now have 3 revenue searchers for next week. So on Tuesday, we got Miguel from TPN. Then on Wednesday, we have Mike from Macro Cosmos talking about SN13. And then finally, we have Targon on Friday. So yeah, that'll be a fun week. And yeah, James, very much appreciated. Cheers, buddy.
Fantastic. Thank you, guys. Stay on the.
Sorry, I think there's a bit of a lag there.
There is.
Right. See you, buddy. Thank you.